I wonder how you read the difference between what we started the week with in terms of rhetoric from the administration and activity in financial markets, where we were on Wednesday, where we're ending the week now, and what really happened in your view.
Oh, my gosh. I mean, so there are weeks where, like, your Bloomberg subscription actually pays for itself, right? And the last 2 weeks, this is like whatever's breaking at the moment. If you're off your device for a moment, you miss like a whole news cycle. A lot has transpired in the last 10 days. The president had this initial approach, which was a focus on China, and then this larger basket of tariffs to go with it. The market reaction was obvious, right? What was not obvious, and is, I think the important stuff here, is that we had financial markets to the point of breaking. That is not a good sign. That is a problematic sign for the Treasuries market. It's a problematic sign for the level of change the president announced. The focus, though, is still on China, and that is the crux of really the signal amidst all this noise, is that the president wants a new reset with the global trading arrangement with China and wants the whole world to come along with him. And the mechanism of bringing the whole world along with him was the announcement of this whole wider basket of enormous tariffs. That was the head scratcher. It was so much more than people expected. Yep. Certainly not priced in the assumption here, and deeply problematic to the point where the president said, look, the market's got yippee and we had to change course. There's a high level of ideology for what the president is seeking with tariffs, but also this certain amount of pragmatism that he's going to push hard, but there's a reasonableness standard still.
Well, so to that point, if this really is all about China, how much ability does the president have to pull back or change policy in a way that can provide cushion to financial markets that look like they're breaking? It was one thing to back away from the reciprocal tariffs on other trading partners, but if he's serious about bringing China to the table, he doesn't necessarily have that same ability to boost risk appetite by leaning away.
Well, this is the complicated piece. So on one shoulder, he has Secretary Lutnick, and on the other shoulder, he has Secretary Bessent.
Peter Navarro in there somewhere.
Well, Peter Navarro is hopping around, right? So, but he's got these two competing approaches. In this point of where things went with the markets, it's clear that Secretary Bessent said, "Look, we've got to pivot here for the financial markets, for just the mechanics of the financial markets to function." What we've now just accepted is a massive set of new tariffs globally. And that is like a huge relief to the market that where we land is still a substantial basket of tariffs on all of our trading partners. Yet the market has responded like this is fabulous news. It is not what, if we'd predicted this a month ago, you would not think that this level of tariff would be a relief to the markets. And that's kind of an interesting takeaway of how dramatic what we've seen day by day. And we end up at a spot that is much higher than markets priced in a month ago. And in Washington, had priced in a month ago.
Well, there may be relief in equity markets. I'm not sure we could say the same necessarily about the bond market. With a 50 basis point move higher on the week on the 10-year Treasury yield, there's now questions as to whether or not this is the safe haven asset it once was. Do you see reason here to question the creditworthiness of the United States? Is full faith and credit about to disappear?
Well, no. I mean, that usually comes to the fore in the debt ceiling negotiations.
Well, we have that ahead of us, too.
And that's to come. But what you've already seen is the House of Representatives pass a raising of the debt ceiling. The Senate, likewise. And so, that's all coming together on Capitol Hill for reconciliation. That should be a little bit of a relief to the financial markets that part will function in a Republican Washington that's already been passed the House and the Senate. But us being the domicile for safety is highly questioned by the markets, obviously. But it's still a comparison trade, frankly. I mean, where we are is compared to the rest of the globe. We still have a strong economy, still have all these great things going for us in our markets. What we want is a consistent set of policy from the executive branch. What we want is regulatory relief, and we want certainty on tax policy. So this does put the onus on Capitol Hill to perform on tax policy and spending cuts. It does put an onus on the administration to deliver the regulatory relief that we all assumed was going to happen in a breakneck pace.
Is there any role for the Federal Reserve in this to keep things stable, or is it really up to those who have been elected to lead the government, whether at the executive or legislative level?
Well, I think what we see where we are now is that the Fed did have a say. They've been highly engaged in informing the executive branch of the functioning of the financial markets, the point of stress. You have a Treasury Secretary that's highly attuned to this and is, as a trader, is on the other side of this and trying to shape policymakers from the outside. And you have a Commerce Secretary who's of Wall Street as well. So I think the president is getting the information. He has a competent economic team, but the president still has a high focus and a love of tariffs that the market, I think, did not price in.
Favorite word in the dictionary. The president also doesn't have to think about re-election, unlike some of your former colleagues in the House who have the midterms coming up very quickly in 2026. How do you think that all of this uncertainty around tariffs actually changes the political calculus when considering whether or not Republicans are going to be able to retain the majority?
Well, let's see what the months ahead are. I think the best time to take political pain is as far distant from the next election as possible, right?
So now's better than spring 2026.
Correct. And so, but 2 months ago would be better than today, obviously. So I think the judgment of this president will be at the ballot box for the midterm, yes, and performance of congressional leaders as well. That performance will be dictated about how people. The results will be as a result of how people feel about the economy, and how they feel about the economy is going to be borne out in the grocery stores and how they're buying and consumer sentiment. The big concern right now is consumer sentiment is so sour.
Yep.
That should tell the party in charge in Washington, you better get on with it, and you better make sure the economy is strong, or there are going to be serious electoral consequences.
And well, just extending the 2017 tax cuts, which would basically mean most consumers are seeing their tax rate be static. Yes, it wouldn't go up, but it also isn't going to go down any further. Does that really provide the kind of juice needed if you're trying to change someone's mind about the economy?
Nope. And you just heard it from a significant member of the Ways and Means Committee, Adrian Smith, who's as tapped in as anybody on trade policy and tax policy. Republican leaders on Capitol Hill need to have real spending cuts. The market will demand that, number one. And number two, you have to do something that is stimulative to the economy, not just an extension of the 2017 tax cuts. This economy is very different than what the president inherited in his first term. His economic team understands that. The regulatory and tax pieces need to fit for this economy, not the one 8 years ago.